This is the weekly review for the week of August 22nd to August 26th, as well as this week's Sunday preparation. So, in terms of how EU ended up playing out this week relative to how I anticipated, it was honestly backwards. So, starting at the beginning of the week, I thought we were going to trade up into this daily fair value gap to form the high of the week since I was bearish, and then go down to take previous month's low, so the low of July. But instead, we ended up trading down first, then having some relative consolidation, and then trading up to the daily fair value gap. Not the initial one, because we formed two other ones, and then trading away down from it. So what I was looking at on Monday, I was initially obviously looking for longs, but price action didn't really give that because we immediately just started trading off from the opening price. We didn't even go above the 12 a.m. open price, and we just traded down, had some consolidation, and then we had a SMT here. And on EU, I was actually looking at GU instead because GU rated these equal highs here. These ones right here. And we formed a setup here, but we never came back up into premium. So I set limits for this at the mean threshold and targeted previous month's low here, just because I saw just this bearish price action trading down immediately, and then we had this bearish setup with the raid taking out equal highs with displacement down, breaking market structure. So this looked extremely bearish, and I said they're probably going to go for previous month's low first. But there was obviously no entry there, either for GU or EU. They never came back up into premium. So then coming into Tuesday, I was just basically waiting for some type of displacement because we already took previous month's low here on Monday, and I didn't really know what they were going to do. So I just said in my journal on Monday night, I said, I'm just going to wait for some type of displacement to try and determine the next direction. So here we had high impact news in London. So I woke up early here at 3 a.m. to see if I could catch something. Now, when I was looking at this live, I didn't really get a grasp of this price action. But looking back at it, I think that it was pretty clear that I should have gotten into a long here. So we just took previous month's low with a SMT on the dollar index and had a break in market structure up on the M5. Now in here is a H1 fair value gap. And I think that that's what I was looking at, this H1 fair value gap in here. And probably this like rate or something like that in terms of like why I wasn't bullish. And then we just ended up consolidating for the rest of London here. But in New York, we went down into a discount relative to the displacement range. And we were just consolidating inside these bullish PD arrays. So if we were actually bearish, I don't think price should have spent time consolidating inside this H1 fair value gap. And then just before the high impact news, we had another lower time frame setup form with this SMT here, and then break in market structure. Now we didn't have a candle closure, but we just wicked and came back into this fair value gap here and then took off. Now, watching this consolidation, I was obviously anticipating some type of expansion because consolidation always precedes expansion. But in my journal, I noted that when watching it live, I just didn't know what direction. But again, looking back at this, I think that this would have been or should have been a clear long for me because it was consolidating inside bullish PD arrays. You know, I don't think it would have made sense to, if price was bearish and it came back up into this H1 fair value gap, for us to be consolidating like this in the discount of the bullish displacement range. And then an easy target would have been these relative equal highs. I definitely wouldn't have, held on for this move. This would have been the easiest, clearest, low-hanging fruit liquidity. And then here I noted that I was debating whether this was going to be a retracement buy or a raid and break in market structure sell, because we had a SMT with previous day's high, but nothing ended up playing out. We just consolidated. So honestly, this should have been a clear long for me, and I understand this better now looking at it in hindsight. Now on Wednesday I was still looking for longs because I noted that even though we took previous month's low already, I felt that we could come back up into this daily fair value gap, right? So they took previous month's low to send price higher into this fair value gap before sending it lower. So that's what I noted on Tuesday. So that's why on Wednesday I started looking for longs again. And initially, prior to New York, I didn't really know what to make of this. We were just kind of consolidating, had this H1 break in market structure and this H1 fair value gap here. So I was kind of bearish, but I didn't want to just short this. I wanted to wait and see if there was a setup forming inside the fair value gap, which we didn't get. We got a low time frame raid here and break in market structure. I believe there's also an SMT, but there was no fair value gap. So I was just sitting on my hands. Then we had this raid of these relative equal lows down here prior to this big expansion up. So initially, I noted I didn't recognize the significance of this liquidity below here live. But because of this SMT and this displacement up, I did set limits at discount here, or at the mean threshold of the displacement range, which we did not, or I did not get filled at. But looking back at this, because usually I only take raids when they're of like a daily liquidity or a session high liquidity, session high or session low, or equal lows. Now these were equal lows, but also the significance was that they're the lows right before this huge displacement up. So that would mean that there's a lot of liquidity below here. And I made a note of that in my journal, that anytime price has a big expansion, whether up or down, the lows or highs just before that are going to be pretty significant as well. Just as significant as like a session high or session low, or previous day's high, previous day's low, something like that. And we ended up having also an SMT with those relative equal lows inside a H1 order block. So even though I didn't notice all of that confluence when I set limits here. Now in hindsight, with seeing all of that confluence and noting it down in my journal, this was definitely a very clean setup, even though it didn't give an entry because it didn't come into discount. But still, like, the logic and context behind it was clean, with these relative equal highs as the low-hanging fruit liquidity. And then there was also a short trade that I noted here. So we made the high of the day at 11 a.m. Now, there was no break in market structure. There was only a shift in market structure here after a GU SMT. And then we came back up into the M5 fair value gap and traded down into the mean threshold of the displacement range. So I noted the displacement range as this high, or this low to that high. This here is just the mean threshold of the daily range from this low all the way down here, the low of the day to the high of the day. And we also ended up trading down into that. But because we had this small little consolidation here, this would have been my my target. Because I have examples in my journal where I would sometimes use the whole daily range, even though there was a smaller displacement range leg, and price would only come down to the discount relative to this displacement range rather than the whole previous or the whole daily range. So Thursday is where I finally took a trade. We rated previous day's high and Tuesday high with the SMT inside a daily fair value gap with this displacement down. So this was just like a textbook setup for me. Now initially we had just this wick break in market structure, and we came back up into premium here inside this fair value gap and then traded off or traded down. The entry that I got in at was in this fair value gap here, also in this breaker. So here we have a new displacement range because we rated it, came down displacement, but we consolidated here. And I have so many examples in my journal where that happens. We'll have a raid, displacement, and then a little bit of consolidation, and then another displacement leg. And if you use the range from that low to that high, price never comes up into premium. It's always the new displacement leg here. So this is the last swing high prior to this move down, and it came up into premium relative to that. And then I took a partial below the low-hanging fruit, and then I took another partial below these equal lows here. Now, I ended up also getting a compound entry in, which ended up stopping me out, which I'm not exactly sure why it did this, but we broke market structure of the low-hanging fruit, and we came back up into this M5 fair value gap, and that's where I had my compound entry limit and my stop above here. And then I moved my stop loss from this this entry to break even, and price ended up coming back all the way up into the breaker at close to London close, and I don't think there was any news here. And then we traded down and took out this low. So I'm not sure what this move was, instead of it being just that. That's the move that I was anticipating, but instead we went higher. So I noted in my journal that I didn't really understand this portion of the move. At least this was clean here, but this not so much. Now on Friday, so going at the end of Thursday, I thought that we were going to come down and take this here. I kind of saw this as a potential market maker sell model with this as the original consolidation. So Thursday night, I was planning that, okay, on Friday, I'm going to continue looking for a sell to take this out. But obviously, we had this huge displacement up in London, right? So then I was just looking at the chart and I was like, okay, this is probably not bearish. So I noticed how we formed a daily swing low here on Tuesday, the higher low here and the higher low here, below this previous month's low with the SMT. So that in conjunction with this displacement up here now on Friday, I said, all right, we're probably going to, or I should be looking for longs. And the reason being because the daily fair value gap that I ended up shorting at or on Thursday, which was this one right here, this wasn't in premium relative to this daily range, right? From this high here to this low. This fair value gap, this daily fair value gap, is in premium of that. So in New York session prior to this retracement, I kind of noted all of that on my chart, right? And I said, okay, we formed that daily swing low below the previous month's low. And we have this daily fair value gap in premium of the daily range. And on Friday, we took previous day's low with displacement up. So here, just before New York, when I was looking at the charts and noting all of that down, I said, okay, I'm going to anticipate a retracement into discount of this range. And of course, we didn't get back into discount, so there was no entry here. We just went slightly above the mean threshold into this H1 fair value gap, but that's not a buy according to the YouTube model, so I didn't do anything, even though I did anticipate this. I anticipated this retracement, and I noted that in my journal. So then we had this other leg up back into this daily fair value gap, which I also noted that I was anticipating. So I was now looking for a sell in here if we were going to have a displacement down with a break in market structure, which we did not really get. This was really sloppy price action. Indices had a much cleaner sell. I know ICT noted the sell here on Friday on S&P 500, which was super clean, but Euro and GU were absolutely garbage in terms of this price action. So there was no low time frame set up here for an entry because there was no break in market structure. And the break in market structure came very late here, and we never even got back into premium. So there was, again, no short here or no long here. Now, it would have made sense for me to just short this daily fair value gap in terms of a swing trade. But because it's EU and I trade it low time frame, I wasn't really thinking about that. But yeah, that ended the week on EU. But in terms of swing trades, the reason I talk about it is because I did get into two positions on US30 here. I was just looking at this on the daily chart, and I noted how in this dealing range that we have from this high where buy side was taken to this low where sell side was taken, we traded back up into premium, took equal highs inside a daily fair value gap, and formed a swing high. So right at this was actually last week, so I forgot to note this in last Sunday's review, but I just marketed in here after we formed this swing high because there's just so much confluence. and I put a stop above here. And then this week, I was looking at this daily fair value gap, and I entered in here just at the top of that candle, and I put my stop above the second fair value gap high. And then obviously Friday we had that huge displacement down. So in terms of targets, it's just because it's a swing trade and the stop is so wide, the lot size is only 0.01, so I can't take any partials. So I'm probably just going to have to adjust my stop loss down, but I'm pretty sure that we're going to be coming for the range low here because all of the macro fundamentals suggest that dollar is going to continue being bullish. And the same thing with Bitcoin. I took a swing trade on Bitcoin because we came back up into the same thing, really, honestly. Bitcoin and the indices are pretty correlated. We came back up into this weekly range here from that high to this low, back into premium here. And then ICT noted here that 3 drives pattern on his Twitter account. How here, we had displacement down, but then we came back up, a little bit of displacement down. And then finally, right when we got into premium here, we had this big move down. And this, I said, okay, we got to short this here because we came up into premium inside of this daily fair value gap. And I got in at the 25% level of the daily fair value gap. And I put my stop above this high here. And I'm targeting these relative equal lows down here. That low. And this low. And now we have another fair value gap that formed. So I'm going to see if I could get a compound entry in here. But yeah, those are just the 2 swing trades that I happen to see in indices and Bitcoin. Right? Because if I was looking at this, like, if we're going to be bearish, if this is actually bearish, this is the time to sell, right? In premium with all of these confluences. So I said I just have to take this trade because all of these confluences line up. But in terms of next week, I think that this low again here is on the menu. So instead of, again, trading up into the fair value gap and then taking previous month's low, we took previous month's low, and then I guess to take the liquidity there and then use that liquidity to drive price up into a premium of the daily fair value gap. And now we're probably going to trade down lower and take this sell side liquidity below previous week's low. So we have this fair value gap here. We took all of this liquidity on Friday. So we have a high time frame or H1 mentorship setup with SMT. Actually, there's no SMT here. But we rated it into a fair value gap, displacement down, and now we have this breaker and this fair value gap. So I'm thinking we could probably make some type of low time frame setup inside this area, and I'm going to take a short there if that happens to form. And the same thing with the XY. Came back down into this daily fair value gap and discount relative to this range, and now we have these relative equal highs here that I think are going to be on the menu for next week. Above that, I don't really know. I mean, I'm pretty confident that these are going to be traded to this week. But after we take that, then the rest of the liquidity is from like a decade back. So I honestly don't really know where we go from there because price is now not going to be in a range. So yeah, we'll see what happens when we get there.